Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, check out my daytradingfearless.com website for S&P E-mini future weekly trade zones, either $10 a month or $50 for a lifetime. Also, check out my Patreon page at patreon.com/daytradingfearless, where you can follow along with my trading portfolio. But as always, let's jump right into it. And today we're going to be talking a little bit about Fibonacci retracements, okay? And we're going to look for the trend. I'm doing a bunch of these little videos, so make sure you kind of go check out my page, and hopefully you'll be able to find them. And what these are is looking for the trend, and let's kind of zoom in here, right? We could see we were in an uptrend, right? Small time. But then we took out these lows right here, because a low, a high, higher low, higher high, or double top right there. Okay. Pull back, higher lows, and then we took out these highs. So high, low, higher high, or higher low, higher high, higher low, higher high. And then we make a same, right? Higher low, but then this low fails to make a new high. We roll over and take out this low. We are now in a downtrend. Now, with that being said, this is where we want to grab our Fibonacci tool, okay? And this leg of right here, okay, this is one leg. As we could see, if we look down here at the stochastic, we could see we actually have divergence from here, or actually from, we'll say this low all the way down to this low right here, right? Okay, as we're making new lows, we're making a higher low. So this is divergence. With that being said, we know just this leg, we now see the reversal, right? Just taking a trend line, go like this. We're now on the other side of that trend line. So this is what's called the retracement. Well, what we want to do is we want to be able to identify the divergence if there is, okay? Just something to be aware of, right? But let's go from this high to this low, grab our Fibonacci, and draw our zones, right? What we're looking for, and the way I have my Fibonacci set up is, here's our leg, here's our retracement back up. Chances are, knowing that we've taken out these lows, especially this low, we're in a downtrend. So what happens is, on the way back up, I want to look to short between the 61.8 and the 70%. And my stop loss will be above the 100% up here. Okay, so as we start to come up right on the small trend, we're making lower highs, right? Low, a high, okay, a pullback, and then this green candle takes out that high. So we have a low, a high, a higher low with a higher high, a pullback, okay, and then price makes a higher high. So this trend is a smaller trend within the bigger trend. I hope that makes sense, right? So what we want to look for is, we want to look for somewhere in between this area, which is our, we'll call it the kind of zone to get short, okay? And look for our short. And what I like to do is maybe enter part of the position at the 61.8, add to the position up at the 70, and then maybe add a little higher, maybe up around this level, right? A prior swing high. But just in case it goes up, I can actually look for maybe the 85%, something 85 or 90, right? Where it might make a double top up there. And then my stop will go any price above this 100. So my stop would be right above here, right? We need to break a new high because on the bigger picture, this retracement is just retracing this big leg. What we're looking for is short, short, and then the pullback. Okay, so we got short here, had the pullback. Maybe we added to this short here. We'd have one more add, right? Because if you think about it with the adds, we only have this much risk here. We have this much risk at the 70 and this much risk at the 61.8. So we got filled 1, we got filled 2, we never got filled on the 3rd, right? It looked kind of scary for a minute, but we know our stop is here. And we also know the bigger trend is now down, right? Because we took out this major low. We even took out all this price action, okay? And so now price rolls over, comes, bounces, and here is our target. The 38.2 is where my target is, okay? I am all out of the position at the 38.2. Now, there is, if you want, you could say, hey, let me scale in, scale in, scale in, and then let me start to scale out. Take some off at the 38, maybe take some more off. If you want, add we'll say the 27.1, okay? And then, or even the 25. And then you can also say, hey, let me scale some more out at the 10 and the 1. However you want to do this, you could start to scale in and scale on the way out. I'll be honest with you, me personally, I'd rather enter here, scale in, scale in. And the reason I like to scale in is because I might miss the 70%. Right? You might just go up to the 61 and then reverse and go to 38. Okay. But if it does, awesome. I really didn't take that much heat and I made about 20%, right? From 61 to 80. Now I understand I'm risking about 40% here, right? If that makes sense, where it's 61.8, it's actually 38. So if I enter here, well, I'm only making this, but I'm risking this, right? So it's a little more, and the percentages work out to I'm risking about 38 versus only making about 20% here, right? So it's almost I'm risking 2 to make 1. But if I'm able to add here at the 70%, okay, well now 61.8 plus 70 now is about 66%, we'll say, somewhere around there. Well, 66 to 100 is now only 44, while 66 to 38 is about, 32 or something? So I'm getting closer to that 1-to-1 risk reward ratio. Now, if you want, you could say, hey, let me enter at the 70 where you're risking 30 here and 30 here to the target. That is a 1-to-1 risk reward, right? That's another way, but you might miss that trade. So I hope I didn't confuse you guys there, but if I do enter that trade, I want to be all out at 38%. I don't like scaling out. I know some people do. The problem is if I scale out, okay, cool, I take some here, but then if it reverses and stops me out, now I have a losing trade. And I really don't want to have to manage like, oh, well, if we break above here, I'm all out, or move my stop to break even. Let me just get out everything there, because when you do the numbers, if you scale out, you have to have a full winner to really get those runners, but a lot of times it'll come to the 30, maybe even to the 30 or 25, and then reverse and stop you out. Well, you only made money on some shares, you still lose on the other shares, which is sometimes a net net break even. If you start to play around with moving your stop, okay, lower instead of leaving it up here, sometimes price will just go sideways too and then fail to where you got stopped out, but it would have already worked. For me, it's like, hey, let me just grab my money and move on. So I hope that video was helpful. I hope it wasn't too confusing. If you have any questions, anything like that, you want to see me make videos on anything, leave a link or comments down below and I'll try and make those videos. But as always, thank you for watching. Until next time, we'll talk to you soon.